Hey, let's talk about some real financial planning here today. So, as a financial advisor, I hear rate of return, rate of return, rate of return. I hear it all the time, and it just annoys the shit out of me. There are other ways of improving your wealth other than just looking at the rate of return of your 401k or your IRA or this or that. Now, rate of return is important, but I've got some ideas that I think will be more beneficial for you than just looking at your rate of return. Um, so, the first thing that I want you to think about every day, or that I look at when I work with my clients, is I take a look at where their money is going, where it's coming from. We all have leaks. We all have money that we just don't know where it goes at the end of the day. Um, for example, I know a lot of folks, and this happened to me. I had, because I don't check my credit card statements, or I used to not, I had several monthly billings that just continued to go on there, rack up until I finally took a look at it and it's like, hey, I don't use this anymore. I need to get rid of it. So that's a very simple way to increase your cash flow. Uh, Another great way is sit down and do some tax planning. So there are about 75,000 pages in the tax code, and about 400 of those are for individual tax return. The rest of those are for businesses. Do you think that somewhere along the line that maybe there's some opportunity for you to save some taxes if you actually sit down and do some tax planning? Of course there is. Now it's not your CPA job or your tax professional's job to do all that for you unless you sit down with them, because that takes time, that takes real skill, it takes real talent. Sometimes you got to look stuff up, and yeah, it's going to cost you some money to sit down and do that, but it's going to pay dividends. Invest in yourself, invest in your time. Another place that you could greatly improve your cash flow over the course of your lifetime, especially in retirement, is take a look at your 401ks. So I want to address this a little bit. So the stock market in November of 1999 was sitting at 17,636, and on March of this year is sitting at 21,917. So a difference of a little over 4,000 points in 20 years. That is not a lot at all. And at the same time, back in 1999, this little highlighter would cost me $1. Now it's going to cost me $1.57. That's how much the dollar has gone down in 20 years. So you combine that with the little bit of what the market's done over 20 years, and that's just not efficient. It's not doing anything for you. And, we're always taught that the stock market, invest in the stock market, it's long term, it's the best way to do that. Yeah, you know what? There are some fantastic stocks that you could get into, and you can make a lot of money. I've seen it happen, no doubt about it. But that is true investing. That is knowing what you're doing, or hiring a money manager that knows what they're doing. It's not putting your money into a 401k and just letting it sit there and let the market do what it's going to do. It does not work. It's not a good way to build wealth. So I'm looking at this, and so in my lifetime, we had the dot-com bust, and then in 2008, the real estate crash. So I'm looking at this. In October 2007, the market was at 17,203. So we jump ahead to October 2013. So 6 years. the market's at 17,807. So a lot of people had a lot of money sitting in those 401ks in 2007, and then it crashed. And the bottom of it was October 2009 at 85.58. So from October of 2009 to 2013, it took 4 years to get back to where they were at in 2007. So from 2007 to 2013, zero. The overall balance was, the net effect was they barely made any money in 6 years. All the while that the dollars that they had in their account was losing money. That is a terrible, terrible thing. And we've been taught that 401ks are the best way to save for retirement, but they're not. And I'm going to go into some deeper thoughts on this in a later video, but I was just sitting here thinking about this. So again, if you want instant return on your investment, one of the best ways to do it is go through all your credit cards, look to see, if you've got charges on there. Sit down with your tax professional. You may be able to save 3, 5, 10, 15, maybe if you're a business owner, 20, 25% in taxes, that just by doing some simple tax planning. But we don't think about this stuff, and I'm hoping I can get some folks to think about this a little bit more. I'm going to have coming up a lot more cash flow ideas, ways to make your money a lot more efficient. But today, I hope I planted a seed, got you thinking about some stuff. If you got any questions, give me a call, 785-430-3717. Thank you.